Hello there, welcome to another video. Today we're talking ETFs, we're talking S&P 500 ETFs. So this is maybe the most popular way for everyday people to invest in the stock market in a safe, simple and diversified way. And ETFs can be a great way to get broad exposure to the whole market or a large part of it and get the average return of the stock market, which is about 8% every year. And the most popular ETFs are S&P 500 ones. The S&P 500 or Standards & Poor 500 is the go-to benchmark for the US stock market. So it's more or less the 500 largest companies in the US, which in terms is almost the 500 largest companies in the world. It's the most stable and well-performing index in the world. There are three main competitors: VOO from Vanguard, SPY from SPDR, and IVV from iSharers. Now I'll be judging them on expense ratio, which is how much you have to pay every year of your profits to hold the ETF, dividend, which is the interest you get paid on your investments, more or less, liquidity, which is how easy it is to buy and sell it, so how much volume is being traded of the specific ETF, Inflow, which is how much money has been moving into the ETF over the last year or so, and then how many platforms you can buy it commission free. Some ETFs can actually be bought with no commission, no trading fee on certain platforms. So let's get to it. So we're starting off with the most popular ETF in the world, SPY from SPDR. And for this one, you have to pay 0.09% of your profits every year in commission. You get 1.77% dividend payouts every year. It has A+ liquidity, which is the highest possible. Over the last year, there's been $49 billion flowing into the ETF. But there are no platforms where you can buy it commission free, sadly. Now moving on to SPY's main competitor, which is from Vanguard, VOO. It is slightly cheaper at 0.04% commission. You get about the same dividend. It only has A in liquidity, but it doesn't really make a difference. All of these ETFs are very easy to sell and buy almost instantly. The inflow has been slightly higher at $58 billion. And you can trade VOO for free at Vanguard's own broker service. So that's always nice. And if you're buying very frequently, so maybe you're saving every month or several times a year, not paying commission can actually make a big difference in the long run. But the most important thing to note is probably these two first ones. So although it might seem very, very insignificant, this difference, it can make a little bit of a difference over 10, 15, 20, 30, 40 years. Moving on to the last competitor, which is IVV from iShares. I believe iShares is owned by Blackrock. It has the same commission as the Vanguard one, so pretty much as cheap as possible. The exact same dividend. The liquidity is the same, but there's been a massive inflow into this ETF at $71 billion. And the best thing about IVV is if you have TD Ameritrade, Fidelity or First Trade as your broker, you can buy this commission free, which is very big. And that sort of brings me to my conclusion, which is if you use Vanguard as your broker, Vanguard is going to be the best one. If you use TD Ameritrade, Fidelity or First Trade, IVV is going to be your best option. If you don't have any of these four brokers, it doesn't really matter. I would probably go with one of these two because the commission is the most important thing. And there's only a 0.2% dividend difference, but there's a 0.5 point difference there. The liquidity doesn't really matter. A is good enough, so it doesn't matter if it's A minus or A plus. The inflow can be significant, but these are the biggest ETFs in the world, so there's so much money, there's such high trade volumes, And all of these companies, Vanguard, iShares and SPDR, are not going anywhere. So it's not like you're afraid of the ETF sort of fizzling off. But of course, the commission-free trading is probably the most important thing, because if you pay between $4 and $10 per trade, and you try to invest every month or 3 or 4 times a year, that can really add up. And if you're only investing small amounts, like a couple of $100 every month, commission free is almost a must. So I would say it depends on what broker you use. They're all great, very good option to get invested in the stock market. As always, this is me signing off. Until my next video, drop me a comment. Let's have a discussion about ETFs and the S&P 500. Until next one.